What's up, everybody? How are you? Thanks for being here today for this webinar. Nice to be speaking with you. Uh, Real quick, can everyone see my trading screen up? Yeah. Okay. All right. Awesome. And just for the active communicating, I appreciate all the people who say yes. Um, if this is your first time ever on a webinar with me, just put in the number 1 right now. And if it's more than 1, just put in the number 2. And there's 2 purposes of me asking this. One is because I'm curious, and 2 is it gets everybody participating with the chat, which is always a nice thing. And Patrick, if someone's saying they can't see or hear, if you could try to help them. All right. Good enough. All right. So, right now I have my trading screen up. I use the Tasty Trade platform. I'm a proud brand ambassador for them. And market's down a little bit today. You can see what I got going on. Nothing. My biggest loser's down $600. Biggest winner's up 1,700. Not a lot going on today, so that's good. I'm not missing anything while I'm doing this, right? Okay. So what I'm gonna do is I am going to take you through a quick history of what I do, and then answer any questions we have. Okay. But the purpose of these webinars, these are public facing webinars, is to just give you an intro into our world, what we do here, and literally what we're all about. And ideally always find new members of our community. Okay. So I'm going to switch to Patrick. Switch me to yeah, there we go. Thank you. All right. Here we go. All right. Here's a quick origin story in terms of where I came from, my services, kind of trades I make, and we'll get into it. So when I started trading, I had success early on, and then so it's a little bit out of order. First, Fortune magazine came and stood behind me when I was trading, and a writer by the name of Nelson Schwartz watched me make $20,000 in a couple minutes. It was a different market then, and yeah, fair enough, Mark. And it was pretty similar. Right? Better hair then. And so after he did that, that kind of paved the way for credibility. Then I ended up going on a television show, and on the television show, they found out that I was a trader, and then all these people wanted to talk about that. I was the Tonight Show, everything else, and all that stuff led to all these people writing in asking for my help in the subject. Patrick, this XYZ person, can you just remove them? They just keep saying over and over again, let's get started, as I'm in the middle of talking. It's just kind of annoying. I don't need them on the call. I like only positive energy. You know, you reach a point in your life where you only want to be with people that have positive energy, want to move forward. And I've learned I'd rather have 100 great people than 1,000 people and deal with headaches. So XYZ is gone. Banned. Thank you. Okay. So as the story goes, everyone wrote in asking for help. I started a trading community. It grew it to the point where I was emailing over 1 million people every day. And we started doing all these different services. It started with stocks, then it moved into options. And in 2021, up and coming fintech company with a lot of money that they raised came in and said, we want to buy your company. And I sold it. And then 3-4 years later, I was able to get it back. And the whole thing about it was, okay, now it's like a second act. How am I going to do it different? Well, I think you just saw a small glimpse into how I do it different. Like, I literally only surround myself with good energy people. I'm here to be positive, have a good time. And it really is my joy to do this. So if anyone's, like, listen, I like people to disagree with me. Like, if you don't like a trade or you want to question a trade or a strategy, let's talk about it all day long. That's how we grow and get better, right? But like a heckler in the comment section is like, come on, I'm not dealing with that. I don't have to. Okay. So I'll get into the real quick history of the stocks. Is day trading used to be a good industry. Like, when I made $20,000 in 10 minutes, it was a completely different way of trading. That way of trading no longer exists. And so then I switched to swing trading. And then eventually I got into options trading. And I'm going to take you through the couple of different kinds of option trades I made. And that will roll us into where we are now. So the first was selling puts. And the idea was, imagine if you could go back in time and take advantage of a missed trade. And so what I did was, it was Starbucks. I still remember the stock was Starbucks. I sold, the stock was at 70, went to 72. I sold a 70 put for 67 cents on 10 contracts at $670. Okay. And the idea was, if Starbucks goes up, I make the 670. If it stays the same, I make the 670. And if it goes down, then I would own it at 70 less 67 cents, which would be 69.33. Starbucks went up, the option expired worthless. I collected $670, and I went on to do that 17 times in a row. It's cool, but it's not that impressive because the trades I was putting on had an 80% chance of success. So getting 100% winners, you're supposed to have, at least if you were putting on 17 trades, 13 winners. So I got 4 extra. And what I learned quickly was the value of premium collection and how beautiful it is. And I started to incorporate it into everything that I did. From there, after the credit spreads, people started saying, okay, I like this. I like that we win on trades. I like that we collect money, but how do we collect more money and how do we make them less time sensitive? So my mission then was to take the idea of selling puts or credit spreads and offer a larger piece of capital return and also make them less time sensitive. So I introduced the diagonal calendar spread. It's a lesser known strategy that provides leverage with some degree of safety. It's a spread that takes a long position in one month and a short position in another month at a different strike price. And a diagonal spread attempts to capture time decay without completely sacrificing directional speculation. In other words, the trade could benefit from a difference in the rate of time decay between the long position, which expires further out than the short. In addition, the trade could benefit from a correct speculation in direction. So you could benefit from the stock going up and also time decay. And the best part is, if you do it correctly, you could even own your long call at zero cost. And we actually, I'm going to show you a little bit later, we put on the biggest trade we've ever made today. It doesn't always happen like that, just coincidence, but very exciting. The biggest trade we've made is today, and I'll show you that in a little bit when you stay on. I'll give you the trade. the street had said that this is their favorite strategy, the calendar diagonal. And if you look in the second paragraph, it says, should the short side of the calendar diagonal spread expire worthless, that actually becomes the free money that buys the long side of the spread. Okay. And if you're able to cover the long side by selling the weekly short sides, I don't know. And by the way, you could chat in like, I don't get this, going too fast, anything. I don't mind comments as I go. But pretty much you could have infinitesimal returns because you'll own an option at zero cost. Okay, which is the end goal that we try to get to with this. So when we're doing a diagonal trade, it's made up of one long and one short. It's either both calls or both puts. You're buying a long call, selling a call against it, or buying a put, selling a put against it. The reason I love these trades, it's put on for a debit, benefits from time passing, benefits from increasing volatility. It's a defined risk trade, and profit is realized on closing the trade. We never sell naked options on the short side. We'll never sell naked calls. We will sell puts at times to take ownership. Sometimes we own calls and sell calls against, and we're doing a lot of different things with options there. Okay? But the diagonal calendar is a synthetic covered call. The reason I like a diagonal calendar strategy is because it gives you confidence, because if you own a call and you sell a call against it, you are winning on one side of the trade. If it goes up, you're winning on the long call. If it goes down, you're winning on the short call. And if it goes up but not past the call you sold, then you're winning on both. Okay? It gives you discipline. You're not going to panic and get out of trade because you know you're able to reduce the cost every week, and because there's a premium collection component, you get paid every week. Okay? So here's an old example. This is MU Micron, and I'm going to show you like the one we put on today, but this is just set up for a teaching tool right now. So MU, when it was trading at like 42, we thought it could go to 45. So if you bought 100 shares of MU at $41.69, it would cost you $4,169. But if you buy the $40 call going out 40 days, 54 days in this case, 54 days, it costs you, instead of over $4,000, it costs you just $435 to own that call for the right to own MU, right? And then what we're going to do is, tell me if you understand this so far with MU. You guys, just give me a yes. You all understand the idea of buying a 40 call in MU going out 54 days? Yes? Everyone's on that level? You got that? I'm just stopping for a sec just to check in, make sure you guys are here. Because if you guys didn't get that, then I could slow it down and go over it. But I think you would for the most part. Okay. All right. So let's say we're long this call. Now what we're going to do is we're going to sell a weekly call against it that's going out just 5 days or 90. I can't say. And we're going to collect 70 cents. So we buy the long call for $4.35. We sell the short call for 70 cents. Okay. And we're going to keep collecting the weeklies. And the weekly collection will add up to more than the long call is worth. So here's the math on that. Okay. Wait, I'm going to stop the video for a step. Stop camera. Oh, it's still messed up where I can't see it, but the camera was in the way. So I don't know why it's a little messed up. Maybe it's the screen or whatever. But if you collect 70 cents for the 9 weeks you're in the trade, that's $6.30, which means you will have collected over those 9 weeks $630. The original cost of that long call was $435. So that means if the stock goes nowhere and your long call goes to zero, you're still going to make 44.8% on your return. The most important thing I want you to see here, and it's not definitive that you'll collect 70 cents every week. If it's a more volatile market, you could collect more. If it's a less volatile market, you could collect less. The goal is just to average 70 cents a week, okay? If you do that, that 70 cents a week adds up to $630. The cost of the long call was $435. So you're coming out up 45% with the value of the long call going to zero. That's what I mean by you own the option at zero cost and all the profits are infinity. Does this make sense to you? other than the fact that the slide is a little hard to read. Do you understand what I just showed you? And I appreciate Ron, Dennis, Ian, Ion, Jerry, Andy, Mary, like Mark, Laura, everyone writing in. It's good. I feed off the energy. So thank you. Okay. So one more, just like this, was like Ford. This is when it was at 22. This is now Ford's at $9. But if you want to buy a long call in Ford 22 for $1.71, and you're going out 11 weeks, and then you could sell the weekly calls for 36 cents. 11 times 36 is $3.96. The cost of the original option was $17.10. You're collecting $3,960. It's 131% with Ford going nowhere. A lot of ways to win in this strategy. I was actually on Fox for the opening of the Bitcoin futures, and what we're doing with Bitcoin in terms of options and premium collection, I'll take you into the trade. Unbelievable. So exciting. You're going to love what I show you with this. But we've done a lot of cryptocurrency trading via options, not trading on Coinbase. We're trading through tastytrade. We use options and stocks to make money from the cryptocurrency market, which is awesome. Okay. But this was a trade we had done in Riot, which was owning options, just a pure option trade that worked out really well. Okay. So let me go. All right. Let me tell you two things. So number one, and this is really important, when I switched companies, in my original company, when I switched from stocks to options, I first started with just buying calls and puts. And that was the Phoenix letter. And then I introduced credit spreads, and that was the options money machine. And then I introduced diagonal calendars, which is the options wealth machine. Then I introduced a covered call strategy, and that was the mesh private portfolio. And I kept going and building on the options programs with all these different services. But something about that was hard because trade flow became a problem, in that sometimes it's best to do a credit spread. Sometimes you want to take ownership of a stock. Sometimes you want to do a diagonal calendar. And I wanted to be set up in a position where I always do what's best for my community. So when I got my company back, I said, I'm just going to have one service, Mesh Prime meaning one, where I do any trade I want to make in that one place. And we started it last year, and it's really been the best thing I've ever done in trading. And like, we have an amazing group. And the best part is that there's always trades to be made. But the best part about it is that I could always just make whatever I want to do. Okay. So here, let me show you here. And we do it very small. We do small number of contracts because the idea is that anyone who wants to do this can do this. But if you want to go bigger, you can. I know a lot of people do. But if you want to feel comfortable and go smaller, then that's an option as well. Okay. So let me go here, stop screen. And now I'm going to present here. Share screen, window, here. Okay. So this is Mesh Prime now, and this is typically risking a very little amount per trade. I got to check these stats. Sometimes it gets spotty, but it says it's 27 trades, 20 winners, 7 losers. It says our average loss is $57 if we lose, and our average win is $235. Look at that and process those numbers for a second, because it's really super cool. What that means is we're going to win 3 times as much as we do, and when we win, we're going to win for 5 times as much. Okay. And so the other thing is, this is what you want to see in anything. Since we began, our first trade went in August 2024. So we haven't even been doing it a year yet. We've only been doing it 6 months. And you can see the equity curve is just constantly going in the right direction, up, very, very comfortable, and pretty proud of this. We haven't had a losing month since we got started, and there have been losing months in the stock market. So, this is an A+ report card, and this is. I just put the trades we're doing into a tracker, and this spits out the results. And so the fact that I could show this, and we have this kind of success, does that give you guys confidence in me as someone who could provide trade ideas to you? Yes or no? Right? Does this make sense? Does this legitimize what I'm saying? I think it's helpful. And you guys, I'm sure you go on a lot of different presentations. How many people spit out a track record that will show you every trade they've made and detail it? Right? I'm pretty proud of that. I think it's just without uncertainty, right? So if we go to the trades, so here's every trade we made. And now I'm going to go to what we're in now. Okay. So these are our current open positions. So this is since August 2024, Sam. So this is WiMAX. And what we did was we sold a 19 put to take ownership of it. Okay. Now this is why I think you should feel really good about our plan and what we're going to do going forward. And what I'm about to tell you should give you more confidence than anything else. We took ownership of WiMAX at 19. It's currently trading at 16.57. So on 100 shares from 19, we should be down $240. But we're up $243. So then the question becomes, how are we up $240 even though the stock has gone down over $2 against us? Well, and the answer is we sold a put to take ownership, so we collected premium. And then in this stock, it pays a dividend every week. And so we've been collecting dividends every week, which lowers our cost basis. So even though we took ownership at 19, our cost basis is 14.14. The stock hasn't been at 14.14 since we've been trading it. It's gone to like 16. It's gone to 19. It's never been to 14, but we own it at a cost basis of 14.14. And as long as it stays in business, we're on pace to, in a little over a year, own this stock at zero. We will own this stock. Actually, if we're collecting 20 cents a month, 80 cents, 960. Sorry. In a year and a half, if we hold this for a year and a half and it goes nowhere, our cost basis will be zero. And then every dividend and every move this stock makes is just profit. Okay? This is the kind of stuff we're doing in our portfolio right now. That's awesome. And what I love is when I go through all these open trades, every one of them is going to be different. This is JMIA. We sold a 450 put for 50 cents. It's currently trading at like $4 and change. But we are up in it because after we sold the put and took ownership, we then sold calls for 20 cents. And then we sold another call for 40 cents. So our cost basis on this one is 60 cents and 50 cents is $1.10. Is we own JMIA at 340. So even though the stock has gone down a little bit since we bought it, again, we are up in this nicely because of the way that we traded it. So I hope you're getting excited because what I'm showing you is a professional way to put on trades where you can feel really comfortable about your portfolio. URA is And like I know someone in my community that did this for 5,000 shares, and I'm so excited for them because it'd be great. So this one we sold puts at 31, and it's currently at 29. So if you did 400 shares, you should be down $800. We're only down 250, because we're collecting premium, and the next one expires in June. The 40 cents. This is actually up now because it moved up since we sold that. But like we collected 52 cents, 53 cents, 65 cents, and 40 cents. So we keep lowering our cost basis, and we're going to keep collecting premium. And it's very different. Sam, I'll answer that a little bit, but the answer is yeah, very much different. So I love the stock. I'm psyched where we're at with this one. But and then you add the professionalism with the creativity of finding good stock ideas. So for anyone that saw the quantum plays explode, think about how early we got in. We bought 200 shares of Qubits at $1.92. The thing went to like 15. Okay, we sold 100 shares at 365, doubling our money. And then we kept 100 shares, and now we sold calls against it where we're going to collect premium and keep paying for the trade. So literally, we risked $380. We're already up $736 in this trade. But this is my favorite. This is a crypto play I was telling you about. Okay. I mean, and when you see the creative stuff we're doing here that you can learn, I hope you get excited because this is amazing. So BITO, we sold the 24 puts for 75 cents, okay, to take ownership at 23.25, okay? And then what we did is we started selling calls against it. So we sold we rolled this up to 26 because the stock kept going up. So we collected another 48 cents by rolling it up. So we've now collected $1.23, right? So we took ownership over here at 26. Then we collected another 35 cents. So it's $1.58. And then we collected another 78 cents. So we're at 236 collected. Okay. But here's the best part. BITO is a derivatives way of trading cryptocurrency by itself. So it pays a monthly dividend. And the dividend that we collected on February 3rd was 94 cents. So what we know is they pay the dividends on the last week of every month. So we roll the options on the third week of every month so we don't get impacted by the dividend at all. So we're doubly collecting. Here's a stock that plays a 55% premium, right? And on top of the 55% premium, we're also selling calls against it. So we're literally like on a race where we're going to own this crypto play, BITO, at a $0 cost basis again within 16 months. So even though we've made money every month, the portfolio we're building now will be setting you up for years to come. Our plan is in a couple of years that we own a bunch of these stocks because of the way we collect premium and dividends for a zero cost basis. Does this make sense what I just explained to you in BITO? It's one of the most exciting things we've done. I know the people love it. They're excited about it. I just want to make sure you guys follow what I've done here and what I'm explaining, because this is just a really exciting trade that not many people are doing. Does it excite you? Do you guys is this the kind of stuff you're looking for? You know, listen, some people have money managers. I have someone who manages my money, and then you trade for yourself. And when you trade for yourself, you want that to outperform everything else that's doing, but you also want to be careful in how you do it. So we've set something up that's been consistently performing every month. But at the same time, we are being a little bit aggressive in the way that we're selling calls. We're getting the dividends. We're going after it in different ways. Only like 4 or 5 people chatted in yes just there. If you don't understand it, you could put no, and I'll happily explain it further. But this is as exciting as I could get, is this screen right here. Like if you understand what we're doing here, like and you like trading, your only reaction should be, this is so cool. So please let me know if you understand what we're doing here. And also, if you don't, you could write no, by the way. Okay. Oh, Stu, I'll explain. Stu said, how would one enter into these trades? Where do I get these trades? Exactly. I want to make it. Ben, you don't understand? Okay. And impressive, interesting. No. No. Okay. So a couple of people you want to understand better. So let's go through the bottom over here. Start with the bottom line, 12.12, which is when we entered into this position. Okay. So we're selling a put in BITO, and we write these out, and we send out the entire detailed explanation of how to do the trade. And we're on a webinar where you could see it, gets texted to you, all that stuff. So the first thing we're going to do is we're going to sell a put. This is the very first thing I showed you in the presentation. We're selling the 24 put for 75 cents, which means we're willing to own BITO at 23.25. But if it goes above it and it's going to expire worthless, then we just collect the 75 cents, 4 contracts. We made $300. Okay. Now, because it shot up and was at 27, we want to collect more premium. So we rolled it up to 26. We collected another 48 cents. All right. Now we took ownership at $26, but even though we're taking ownership at 26, it's really less because we collected 123. So it's really 24.70 something. Now we're going to sell a 25 call against it. So it lowers our cost basis to 24.35. And then we're going to sell another one. So now we lowered our cost basis to 23 and change. And then we get the dividend at the end of the month, which was 94 cents. So Bitcoin was over 100,000 when we got into this trade. It does better if Bitcoin goes up. Bitcoin went down into the 90,000s, but we're still doing really well because of all the different ways we're collecting premium and dividends. Yes, Mary. Yeah. Okay. So that's the BITO trade. This is a cheap stock that we're willing to own. It's actually up 11% today. I'll show you, which is cool. MVST, they do these new super cool batteries. We sold 10 contracts for 2 strike for 30 cents. If it's above 2, we collect $300. If it's below 2, we own this at $1.70, and you're able to sell pretty good premium in these options. So really excited about this position. Very much new to us, just getting started. This is one where if you joined, you could put it on right away and feel good about it. Same thing with 3D. This is 3D printing. So what I like about 3D printing right now is they just got into the spare parts business. So typically, if you're like a truck, bus, airplane, there's spare parts facilities. So if something breaks, you need to get a spare part. What 3D printing does is they're able to make the spare part on demand. So that eliminates storage. That eliminates all that cost. Okay. And their delivery time, I believe, is like 75% faster. So they're stepping into the spare parts industry, which is a $9 billion industry. And it's a company only worth $600 million right now, market cap. So our simplest thing, though, for us is we just sold a 450 put for 25 cents. If it's about 450, we'll put $250 in our pocket. If not, we're going to own this at 425, and I'm excited to own it for a while. So even though we've done really well and we've made money every month, I'm so excited about the newest trades that we're building. And then I'm going to get into the most aggressive trade we ever made today. But before I show it to you right now, let's play a little game. See how much you guys, and guys is always affection for men and women, have been watching the market. What would you say is the best stock of the year so far? 2025, we're in February, a month in. If you guys are on this call, you're probably watching the markets what's the hottest stock there is? I'll give you a hint. It's a tech stock, has elements of AI, cybersecurity. CEO's a nut, although that could be a bunch of them. Um, yeah, Johnny Boy got it. Who else? Give you a couple more seconds to guess. All right, everyone's getting it now. No, not yet. Nope. Yep. It is Palantir. Palantir has been, if anyone's watched it over the last year plus, it went from 22 to what, 115, 117. Incredible. Okay. And what you realize is if you feel like you missed it when it went from 30 to 40 and checked out, then you really missed it when it made its bigger move. Okay. So, but now, right now, we're not chasing Palantir. Now we've missed it sufficiently. There's another stock that had earnings last week, traded down, then popped back up, and then it came out that Bill Ackman owns 30 million shares of it, and the stock started to spike. And now it's starting to look a little bit like a Palantir stage one move, where it's a stock in the 70s that we think could be $120 this year. Does anyone know what stock I'm talking about now? Give you a second to put your guesses in. Tempest has been great. It's not that. Yeah, Andy, you got it. Although you missed the letter, but that was by accident. Yeah, see, you guys, I don't know if you guys have seen it. Yeah, Bob got it. Uber. Uber is a stock that just started to show like that it's about to get exciting. So here's a stock. It was at 64 last week. Now it hit 78, 77. How do we trade this? Okay. Well, we just put this trade on today. And I'm really excited about it. What we did was we bought a December 19th, 2025 75 call. So we think the stock will be 120 by the end of the year. We have 11 months. So the cost on that 75 call, the right to own it, is $14.40. But obviously, as it trades up, it's going to trade up faster. So we buy this for $14.40, and then we sell the March, because remember, we own the long call to December. We're selling the March 83 strike for $1.20. So we're looking to finance this trade. And obviously, if Uber runs up into the 80s, we're still fine, because the long call further out in time will always carry more value. So then if all of a sudden it shot up to 85, even though we sold the 83 strike, this trade would still be profitable. But what we would do then is we'd roll back the 83 strike. But the expected move over Uber for the next month is $5. So, it just made its move. Maybe it consolidates a little bit. Maybe it goes higher. And we'll keep collecting premium. So if we collect $1.20 over the next 11 months, that would be it would be $13. So it's a little bit below, but we also wanted to give it room over here. We needed to go higher, and then we could sell more, better premium, but we're looking for the appreciation here. And eventually what we'll do is we'll take the handcuff off after we've collected enough premium, and maybe we'll just own the call. But really excited to own this. We'd like to sell calls against to collect premium and navigate this on its way up to 120. And if it got to 120 and we were able to forget the premium by itself, the faster it gets there, the more these calls will be worth. If it took a longer time to get there, these calls would still be worth $45, which would mean we made $6,000 on this trade. Okay. But what's cool is this, right? If we owned 200 shares of Uber at 75, it would cost us $15,000. And if it went to 120, which is 45 points, we'd make $9,000. Okay. In this case, where we would only make $6,000 without the premium collection, but our cost to own it is not $15,000. Our total risk on this is under $3,000. So this is an easier and cheaper way to get into Uber, and I'm really excited about this trade. Does everyone understand the Uber trade? I know some of you understand it at 100%. Some of you are 80. Some of you are 50. Let me tell you something, though. Even if you're just 10%, it's fine, because what we do is every week we come on 2 calls a week. Tuesdays, 11 a.m. recorded, and then Thursdays, 11 a.m. recorded. And, you know, we show you how to do these trades. We put them on, we explain it. So we're teaching every week. There's a large part about this where we want you to be able to do it yourself, but we're always here to do it. Okay. And the community has been growing very nicely. Oops. Let me go here. That's my head really big. Here you go. There we go. Community has been growing really nicely. And what I would like to do is to invite you to be a part of it. Even though it's my second act, I still do need a charge, but I charge less than I used to. And really, it's because we have a great team available to help you and stuff like that. And obviously, we do a really good job. This is what an alert looks like. So when you get an alert, I just want you to see that you will see the stock, the price is trading at, the specific action, exactly how to do the trade so you feel comfortable. And there's always a help team if you don't understand. So we do spell everything out for you, open and close, which is nice. And by the way, we were in Palantir at $23. This was a lot. This was an actual trade we made in Mesh Prime, which is crazy because we did it 6 months ago. So it's not even been a year, where we bought the 22 calls. And we made money in it. We did well in Palantir, but it's just crazy how far it's come up. And we were trading Uber at 62. So yeah, we're in the right stocks here. We were in the quantum plays, we were in the nuclear plays, AI plays, Palantir, Uber. I didn't even realize that these were the ones in the slide, but these were Mesh Prime trades we made. We were trading Uber at 62, Palantir at 22. Okay. Pretty much in the past, as I said, it used to be like all these different services, but what we're doing now is they're all just one. It's just Mesh Prime. You get anything I've ever done, any strategy, all rolled up into one service that comes with weekly options trading, text alerts, an app, plus other opportunities. The value is $2,495 a year, but people don't want to spend $2,495. So even though it's worth, I think, way more than that, this is the rate to join. And I had a monthly offer, but a monthly offer doesn't make sense because all these trades are going on for at least months. So if you're giving this a shot, which you should, you got to give it at least 6 months. So this is a 6-month offer to join for just $467 at adammeshlive.com/Mesh Prime. And Patrick will send out the link right now. It comes with access to a brand new virtual trading floor, all the alerts, you get everything. You get access to the calls every week that we do. And the best part is if you like it in 6 months, your rate will never go up. It works out to it's $467 every 6 months. If you ever decide like, oh my God, I love this, I want to do it forever, how do I join for 2 or 3 years? I don't like doing lifetime services. I'd rather just have to earn your business. But if you ever decide, what's the best rate I can get for 2 or 3 years? You'll speak to someone on my team, and maybe it's a little bit better. But this is pretty good right now. If I do the calculator, if you do it here, I'm doing a calculator. It's 467 divided by 6 equals $77 a month, and it's a service that's been profitable every month. We have the best trades we've ever done going on now. And really just trying to make it super easy for you to be a part of this, okay? But I want you to give it at least 6 months. And then if you want to stop, you're not committed to staying on Ask for 6 months. But if you do stay on, you're grandfathered into this price, okay? So AdamMeshLive.com/Mesh Prime. You could click on the link. And what will happen is you could come in and then you could email Patrick and say, hey, which trades could I put on now? And the answer is all of them. You'll be able to go on the site, look at our portfolio manager, see every trade we have on, and you could put on all these trades. So you'll start earning the dividends, you'll start doing the weekly premium collection, and you'll certainly have a lot of fun with us and learn. And if you can't make the calls live, you can make them recorded. Okay. So this is the offer. Unbelievable. The other thing is I have this new newsletter I've been working on with an AI team that's going to be pretty cool. It's going to come out 5 days a week, where it's reading what the top hottest trends are on the market every single day. And what I can tell you for this, I don't know what we're doing with it yet, but what I can tell you for this, just to make it fun, is the first 10 people who join right now, I will give you that for free, for sure. Even if we end up charging $1,000 a year for it, I will give it to you for free, just as a quick, fast action reward. So first 10 people who join now will get another newsletter for free. But that shouldn't even be why you join. This is just a really good, inexpensive way to get in and learn the way we trade. You'll love building the portfolio, whether it's the BITO and the crypto and the way we're able to get the dividends and collect the premium, or the way we're able to do the Uber trade. I think you'll find it super exciting. So after you sign up right now, just write done so I make sure that you become one of the 10. I'll make sure that you're one of the 10. And then I also will stop and answer any questions that you have. Okay? There is a phone number to call too if you have any questions. It's 212-774-5983. Okay? Yeah. So now we can answer any questions. I could go back to my trading screen, see what's going on, literally whatever you want to do. I could show you the Uber trade on the trading screen. Mary said, if I am not allowed to do naked puts, do I just need to pair it with a positive put for a calendar trade? Yes. I don't know why you wouldn't be allowed to do naked puts, but yes, you can. That would work. But then there might be some times where we're saying to you, we want to own the stock. Now, we're not buying a lot of stock. Usually it's just a couple $1,000s worth or less. But if in Uber, if we took ownership, that would be 200 shares of Uber would be the most expensive trade we've done, because that would cost us like 15 grand. If you only want to do 100, you could certainly just do 100 and then it would cost you 7,500. But that's going big. I'm excited about that one though. I'm sorry. We're not taking ownership. We didn't sell a put. I was thinking about that. We just bought a call. So no, that just costs, the minimum you would need to do that would be 2 contracts. You could do it for like $1,000. And that's still the most expensive trade we've done. Okay. Stuart, you are in. You will have access. Let Patrick Stewart gets access to the new AI newsletter when it comes available. Yeah, we'll keep them coming as go. Welcome, Stuart. Jerry says, if BITO stops its dividend, what would you do? The whole play is based on the dividend, which is a derivative strategy where they pay the dividends. The bet is that Bitcoin's going to hover within the $20,000 range for this year. If it fell apart or the dividend stopped and the game changed, I would probably take a loss and get out. Okay. I'm not stubborn. I will take losses. Although I am changing a little bit, because we sold puts in SoFi, and we sold $14 puts or $12 puts, and it went all the way down to $4. But we kept collecting premium and holding on, and then it came all the way back up to a winning trade. Took 2 years, but a lot of people stuck with me on that. We ended up doing really well with that. So that was good. Does that help you, Jerry? And yeah, Andy, you need to learn how to sell. Well, you'll learn how to do everything on here. And the best part is we teach you every week. So it's set up to learn as you go. The value's in the education. The trade idea is a tremendous benefit, but eventually the idea is that you'll be able to learn how to put these trades on your own too. Okay? That makes sense? John said, okay, long December call, short March call, and over. I'm just joining in. Yeah. So that's the trade we have on in service. John, pretty much the quick explanation, because you say you just joined in, was in my old company, we had all these different services. As I got the company back, what we do now is I took all the trades I've ever made and put them in one service, Mesh Prime. It hasn't had a losing month since we started in August, but literally our favorite trades we've ever put on are right now. You could get them all now. It's $467 for 6 months through the link. Okay. Jerry, like my answer on Bitto that I would take a loss? Yeah. I'm not a proud man, Jerry. If something looks ugly and smells bad, I want out. Okay. What other questions do you have? Bob said, so if Uber went to 84, so you would be able to roll those back. You could roll those back. So let me show you real quick. Show you real quick what that would look like. So let me find, I'm trying to find a trade where, here, SoFi. So look, SoFi, I told you I'm up money. I'm up $2,700 in this trade. So SoFi, we own 600 shares, but we sold an April 17th call for $13, $250. Okay. Now, if I wanted to, what would I do here? And I don't want to do it yet. I'm fine. But what I could do is I could go till September, right? And I could take that 13 call and I could sell a 15 call. And because I'm moving it back from April to September, look, I would collect 33 more cents. Maybe I do want to do this. I collect 33 more cents. And now I have it until it goes to 15. So that's called a roll. And that's one of the most important things you will learn with me, with what we do. Okay? Prasad, I see you are in. Patrick, add Prasad to the AI newsletter as well. Free gift for joining. So do you guys see this? This is a really important, this is a great example. We could take the 13 call. We could roll it back to 15, which is great because SoFi is trading at 14.85, and we still collect 31 cents. Okay? Does that make sense? Wendy said Uber came down this morning, so now it's only 12.55. Am I doing it right? Yep, exactly. It's going to be cheaper because it came down a point. So anyone who gets the Uber now will get it at a better price. Sam said, so how are your trades different from Tim, Steve, and Christian? They're all valuable members of my team. Christian is much more active. So he's going to be doing daily trades, a couple days, pretty much a lot of calls only, not focused on premium collection. He's phenomenal. I love Christian. One of my very first students, huge fan of him. Very different trades. These are more lifestyle trades where you're trading with less money and you're in it for longer periods of time. It's a little less volatile. Steve Smith and I, just different stocks, stuff like that. Also someone I'm a big fan of. And Tim Bigham does unusual options activity, which is a really good service. It's fun. It's smart. But, you know, I'm me. And the nicest thing I could say is I don't have to tell you to do it because you like me or you like my voice or don't like my voice, but it's literally just because of the results. You know what I mean? Because of the results. What other questions? Let's get to 10 people today. I want to get 10 new members in. That's like the way we grow our community, like tiny but mighty. But I really do love what we have on right now. I do love it. This is everything I'm trading right now. Here's the YMAX. I am in Tempest, by the way, whoever brought that up. I had sold the 30 calls for 410. They're worth nothing now. So, and I only have one contract left on this, though. This was a creative trade. I was experimenting with EFA. I was up like $300 in it. Now we didn't put this on for the service. A lot of times I test out trades for the service. This is a play that if the dollar went down, we have some announcements coming up and currencies move down, this would head down. So bought the 79.50 put, sold the 77.50 put. The total risk on the trade was 26 cents. So it's a nice low risk. My biggest loss could be $260, but I can make $2,000 or $1,800 if the market went bad. So it's a small risk, high reward hedge for the market. Okay. All right. Any other questions? Anything else you guys need? If you have any other questions, you could call 212-774-5983. Email in, and that's my plan for the year. You could get in all the trades we have on now and watch as we build this portfolio, collect dividends, collect premium. It's going to be good. All right. There's a couple of people with good energy I'd love to get in. If you have any questions, let me know. Johnny Boy, I liked his energy. Andy, Jerry, Mary. And then Stu. Let me know if you have any questions. There's the link one more time. That's it. Did Uber for $12.50. I like all your services I've tried so far. Thanks, Wendy. You're already in my service, yeah. Let's see. All right, everyone. Thank you so much. Appreciate you. And I'll talk to you soon. Be good.